Hi believers, this is Amit from Waya team and I'm here to provide a weekly bite and the road ahead in the markets. Last week, Indian markets rallied with Nifty index reaching a record high of 22,297. Bank Nifty gained by 0.92% and mid-cap index, which is nothing but a broader market, rose by 0.3%. Outlook for the coming week. On the chart, the Nifty has confirmed an ascending triangle breakout with support from 20 DMA. The daily RSI indicator is also 60, showing bullish momentum. The expected target for Nifty is 22,500 to 23,000. The immediate support for the Nifty is at 22,000. The Bank Nifty is trading near its resistance zone of 47,400. If the Bank Nifty closes above that, we can expect at least a 1,000 point surge. The immediate support for Bank Nifty is 46,000. Although there is no concern on the charts, the market will continue to remain volatile in the short term. As mentioned many times, we have to be invested in the market and continue good up to 2027. The Q3 FY24 earnings season has come to an end. Power, capital goods, banking, infrastructure, and real estate continue to deliver good results. For these sectors, management commentary remained bullish for the upcoming quarter. Power demand increased by 8% in the first 9 months of FY24 and is expected to rise further. This surge in demand has occurred during the previous few years, aided by the government's attempt to complete electrification in both rural and urban India. We remain bullish on power stocks, which are benefiting from the government's push to improve power infrastructure in India. Our upcoming multi-bagger will benefit from the power capex. We will shortly be sending out the call to our subscribers. India is just way too big to ignore. Jeffries has come out with very interesting report on India market. It says India's market capitalization is currently fifth largest in the world at $4.5 trillion, but its weight in the global indices remains modest at 1.6%, ranking 10th. This should alter as market free float increases and survey anomalies are resolved. Assuming market returns consistent with the last 15-20 years and fresh listings, India will be approximately a US $10 trillion economy by 2030. According to EPFR Global Research, they are receiving over a year's worth of continuous weekly inflows. The inflows continue to be quite large, typically exceeding $500 million per week for India dedicated fund. We believe that investing in India is a no-brainer because all economic factors supporting Indian economy. We have consumption and production tailwinds, government capital expenditure at all-time high, rising per capita income, the fastest growing economy and much more. As a result, India is too enormous to be ignored by international investors. Moving to US market in United States inched higher, marking a new life highs on the back of Magnificent Seven, which are Nvidia, Microsoft, Meta, Alphabet, Tesla, Apple and Amazon, continuing to deliver above expected Q1 results. Key factors that fuel the US market includes Nvidia's impressive earnings, a decrease in US jobless claims, and US FOMC meeting minutes released this week failed to provide any time of rate cut. The market interpreted this data positively as evidence of steady economy, yet there's divergence in which interest rates are rising with equities. The delay in rate decreases has been warmly received by market participants as of now. So we don't have to worry about the rate cut in US at this point of time. Let me give you an update on VA Tech Vabak, a multi-bagger which met the target and still we are holding. The company is benefiting from strong capex cycle in water and water treatment space, particularly in the domestic market. It is sitting on an order book of close to rupees 12,500 crore or 4 times its annual revenue. The strategy to move up the value chain, reduction in debt, focus on margins, and strong order book should support higher earnings. That's pretty much it for today's bulletin. Wishing you all a great trading week ahead.